94% of retail traders lose money because they're making one critical mistake. They're looking at either technical or fundamental analysis, never both. While they're arguing over which approach is better, I've made over $250,000 in the past year by focusing on just two things that combine both worlds. I've analyzed thousands of trades and discovered something shocking. The most successful traders aren't purely technical or purely fundamental. They're the ones who've mastered the intersection of both approaches. What we're gonna cover today completely transformed my trading and gave me consistent profits month over month. What if I told you that the technical versus fundamental debate is completely pointless? The market is a complex ecosystem where price moves based on both technical patterns and fundamental realities. Focusing on just one is like trying to drive a car with only one eye open. Today, I'm going to show you the only two things that you should be focusing on if you want to start consistently winning in the markets: price action and fundamental catalysts. This combined approach completely transformed my trading, and I guarantee it will transform yours too. 5 years ago, I was exactly where many of you are right now. I was a hardcore technical trader. My charts had every indicator imaginable: RSI, MACD, Bollinger Bands, Fibonacci, you name it. I thought fundamentals were for long-term investors who didn't understand the power of technical analysis. I remember this trade specifically. I shorted Netflix because all my technical indicators said it was overbought. Everything lined up perfectly according to my chart patterns. I put in $22,000 of my own money, and within 48 hours, after they announced crushing their subscriber estimates, I lost $15,600. That loss taught me a painful but valuable lesson. Price doesn't move in a vacuum. Technical patterns matter, but they're only half the story. After that disaster, I spent 6 months studying the world's top traders, the ones consistently making millions, and I noticed something that all those had in common. They analyzed both price action and fundamental catalysts before making any trade. When I finally combined these two approaches, everything changed. I stopped fighting the market and started flowing with it. Let me show you exactly how this works. Let's start with price action, the core of technical analysis. Price action is simply the movement of price on your chart. It tells you exactly what the market is doing right now, not what some lagging indicator thinks it might do. When you learn to read price action, you're seeing the collective psychology of all market participants. Are buyers or sellers in control? Is momentum building or fading? Where are the key levels that traders are respecting? For example, when you see a series of higher highs and higher lows like this, you don't need an indicator to tell you the trend is up. The market is literally showing you its direction. But here's where most traders go wrong. They focus exclusively on these patterns without understanding why they're forming. Let me be clear about something. There's nothing inherently wrong with indicators like the RSI, the MACD, or the moving averages. They can be useful tools. The problem is when traders rely solely on these indicators without understanding that they're all derived from price action itself. Every single indicator is just a mathematical formula applied to price data. When I stripped away all the indicators from my charts and forced myself to focus purely on price action, I started to see things I missed before. I could see where big money was stepping in to buy, where selling pressure was overwhelming, and where key battles were forming at support and resistance levels. But here's where most pure technical traders fail. They don't understand why the price is moving. Last year, I watched thousands of traders get destroyed shorting Tesla purely based on technical patterns, while completely ignoring the fundamental catalyst of their massive AI chip development that was driving institutional buying. Here's the mistake most technical traders make. They use indicators to predict what price will do next without understanding the fundamental forces that completely invalidate those patterns overnight. By the time your RSI hits oversold, by the time your MACD crosses, if a company announces blowout earnings or a major news product, those technical patterns become meaningless in seconds. Think about it this way. Technical analysis is like studying the footprints of a herd of animals. You can see where they've been and maybe predict where they're going based on their patterns. But fundamental analysis tells you why they're moving. Maybe there's a water source ahead, or maybe there's a predator chasing them. Wouldn't you want to know both? This brings us to the second critical element, fundamental catalysts. If price action shows you what the market is doing, fundamental catalysts will tell you why it's happening and whether it's likely to continue. Fundamental catalysts include earnings reports, product launches, management changes, regulatory approvals, industry trends, and macroeconomic events. These are the forces that can overpower any technical pattern. When you integrate fundamental catalyst with price action, you start trading with the big money instead of against it. You're no longer surprised by random breakouts or breakdowns. You understand exactly what's driving them. A big part of my process now involves tracking these potential catalysts before they happen. I want to know when companies are reporting earnings, when key product launches are scheduled, and when industry conferences might reveal new information. This allows me to position myself ahead of potential moves rather than reacting after they've already started. One of my biggest trades last year was catching this breakout in Nvidia. Technically, it was forming a perfect cup and handle pattern, but what made me size up on this trade was understanding the fundamental catalyst, their dominant position in AI chips in their massive data center. I rode this move for a 42% gain in just over a month. Now, pure fundamental traders make the opposite mistake. They analyze company financials and industry trends, but they ignore the price action entirely. They buy undervalued stocks that keep falling for months or years, wondering why the market doesn't see what they see. The truth is, sometimes a stock remains undervalued for years before the market recognizes it. Without technical analysis, you can be right about a company, but completely wrong about the timing. And timing is everything in trading. I call these value traps, stocks that look cheap on paper, but continue declining because the technical picture is deteriorating. Without price action analysis, you'll keep averaging down on losing positions, convinced the market will eventually recognize the value that you see. Let me give you a personal example of this. Early in my investing career, I was convinced BlackBerry is undervalued based on their patents, security technology, and automotive software. Fundamentally, I still believe I was right, but I completely ignored the deteriorating price action and ended up holding a position that climbed over 60% before I finally admitted my timing was wrong. When you combine price action with fundamental catalysts, you get the complete picture. You understand what is happening, why it's happening, and whether it's likely to continue. Here's what I look for: strong technical patterns that align with powerful fundamental catalysts. When price breaks a key level and there's a fundamental reason driving it, that's when I size up my positions. When technical and fundamental analysts agree, that's when the biggest, most reliable moves happen. I become obsessive about documenting both aspects in my trading journal. For every trade, I record not only the technical setup, but also the fundamental thesis behind it. This forces me to articulate why I believe price should move in my expected direction beyond just the chart looks good. And this is exactly why I built MarketDash.io, to automate this dual analysis process. I was spending hours every day manually cross-referencing technical setups with fundamental catalysts. Now the software does all the heavy lifting for me, flagging opportunities where both factors align. The paradox of trading is that most people think that they need to choose between technical and fundamental analysis. The reality is that the market doesn't care about your preferred methodology. It responds to both technical and fundamental forces. On one side, we have the pure technical traders with their charts covered in indicators, ignoring all the fundamental realities. On the other side, we have fundamental traders with their spreadsheets and valuation models, completely ignoring price action. Both are missing half the picture. I challenge you right now, for your next 5 trades, analyze both the technical and the fundamental catalysts. Force yourself to articulate why price should move in your expected direction. I guarantee you'll make better decisions. Here's a practical way to start. Before entering any trade, identify the technical pattern on your chart. Then ask yourself, what fundamental catalyst might drive this pattern to completion? If you can't identify one, maybe you should reconsider the trade. To be clear, I'm not saying you need to become a financial analyst with complex spreadsheets and valuation models. You just need to be aware of the major catalysts that could impact your trades: earnings dates, product announcements, regulatory decisions, market trends, and so forth and so forth. I keep a simple calendar with key dates for companies I'm watching. I subscribe to their press releases. I follow industry news. This doesn't take hours a day, maybe 15 to 20 minutes of preparation that can save you from disastrous trades like my Netflix example earlier. Now, I want to be completely transparent with you. Mastering this integrated approach isn't an overnight process. It took me nearly a year of dedicated study and practice before I could seamlessly blend technical and fundamental analysis. The first step is recognizing that both approaches have value. The second step is studying each discipline separately to understand its strengths and its weaknesses. The final step is developing an integrated framework where each approach informs and enhances the others. But the results speak for themselves. Before making this shift, my win rate was 48%. In the year since integrating price action with fundamental catalyst, it's jumped to 76%. More importantly, my average winner is now 3.2 times larger than my average loser. What I've shared today isn't some revolutionary new system. It's actually what professional traders and institutions have been doing for decades. While retail traders argue over which approach is better, the pros are quietly profiting by using both. Remember what I said at the beginning about 94% of traders losing money? They're the ones stubbornly sticking to either pure technical or pure fundamental analysis. The 6% who consistently win are the ones who've learned to integrate both worlds. This is exactly why I created MarketDash.io, to bring that powerful fundamental analysis to everyday traders. This software dives deep into companies' financials, their growth metrics, competitive positioning, and the upcoming catalyst. Then it presents these data alongside price charts so that you can make truly informed decisions. If you want to implement this exact dual analysis approach yourself, I built a software called MarketDash.io that does all the heavy lifting on the fundamental side for you. While most trading platforms only give you the technical charts, MarketDash gives you the complete fundamental picture that 94% of traders are missing. MarketDash.io gives you instant access to comprehensive fundamental data such as earnings forecasts, revenue growth, profit margins, management changes, and upcoming catalysts, all presented in an intuitive dashboard. It's like having a team of financial analysts working for you 24/7. Click the link in the description to get a 7-day free trial. Over 1,000 traders are already using MarketDash to transform their approach. Many have messaged me saying it's the single most valuable tool they found for bringing professional-grade fundamental analysis to their technical trading strategies. The platform includes earnings surprise history, competitive analysis, institutional ownership changes, insider trading alerts. You'll know exactly what fundamental forces are driving price movements. Trading isn't about ignoring fundamentals in favor of technical patterns. It's about using fundamental analysis to validate and strengthen your technical approach. MarketDash.io puts professional-grade fundamental data at your fingertips. The market doesn't care about your trading philosophy. While 94% of traders get caught up in technical indicators, the most successful investors understand the fundamental forces driving those movements. MarketDash.io gives you the fundamental edge in one place. So try it today. I'll see you in the next video.